While retail is panicking, institutions just made a massive infrastructure play for 2026.
And most traders are missing it completely. How is that possible?
This paradox is creating the exact conditions that precede huge bull runs. Let's break it down.
Okay, so what were the big shifts in the last 12 hours?
4 huge ones. Corporate treasuries are accumulating Bitcoin. Exchange infrastructure is at record dominance. Also, Layer 2 solutions officially overtook Ethereum. And we finally have major regulatory clarity.
Let's start with the exchanges. What happened overnight that no one is talking about?
Centralized exchange mindshare exploded 87% to an all-time high. But get this, cross-chain interoperability mindshare detonated by 585%.
585%? That's not retail. That has to be institutional positioning.
Exactly. They're demanding battle-tested infrastructure for multi-chain portfolio management.
So capital is rotating from experimental projects to proven foundational systems. What else?
Layer that with the corporate buyback surge. Mindshare jumped 40% to a dominant 16.81%.
Is there a specific example of this?
Tether just bought over 8,800 Bitcoin during peak fear. It's systematic accumulation.
So they're setting a price floor while everyone else is scared. Institutions buy fear. Retail sells it.
Right. Meanwhile, the Layer 1 and 2 battles have entered a new phase. Monad's MON token surged nearly 25% after their mainnet launch, proving institutional-grade performance.
And what's happening with Ethereum's Layer 2s?
They are now processing 6.6 times more transactions than the mainnet itself. It's a full ecosystem migration.
That's wild. But while institutions build, what's happening with the retail side of things?
That's the fascinating part. Meme coins staged a comeback. Pepe surged 28%.
Wait, Pepe surged while the fear index was at 22. That makes no sense.
It's a negative correlation of -0.87. The market has 2 separate frequencies.
Serious institutional building on one side and high-risk retail speculation on the other. That's a key insight.
And underneath it all, the regulatory landscape just shifted massively in crypto's favor.
What changed?
The Genius Act passed, and the OCC granted national trust bank charters to firms like Fidelity, Circle, and Ripple.
So this is systematic de-risking of the whole asset class. It opens the door for big money.
Right. This all ties into what we call the fear infrastructure paradox. Retail sentiment shows extreme fear, yet infrastructure development and corporate buying are exploding.
So the foundation is getting stronger while short-term sentiment is weak. A classic pre-bull run signal.
History shows this is the accumulation phase. Don't just watch fear and greed, watch development metrics.
So what are the key leading indicators we should be tracking?
Track CEX mindshare, cross-chain volumes, and Layer 2 TVL dominance. Also, watch corporate buyback news.
This market is moving so fast. How can people possibly stay ahead of all these shifts?
That's why we do this. For real-time intelligence, hit subscribe and turn on notifications. Your next Crypto Pulse update drops in just 12 hours. Trade smart and stay ahead.